Hello Wolfpack. So inflation numbers came in yesterday, and you can see on the chart here when exactly they came in. It's quite obvious. They came in right here, okay? And we've seen in the hours following that, we've seen basically a drop of around 12% in a matter of about 8 to 9, maybe 10 hours, right? So big stuff there for Bitcoin moving on inflation. It's like, well, why did it go down? Well, it went down for a few reasons, and this is reasons that a lot of people don't understand, okay? So it's very important to understand this. I'm going to explain it to you right now. So essentially we had inflation in the month before at 8.5%. That was what inflation was. Okay, that was regular inflation. And then we had core inflation at around 5.9%. Okay, so what we essentially saw, these were the prior numbers, okay? What we saw was the market was expecting inflation to come in at 8.1%. Okay, so that's what the market priced in. The market had priced that in. That's why we came up this high. It was expecting an 8.1% inflation. So if we saw an 8.1% inflation release, we would have just gone sideways because it would have been neutral, right? But the market was already expecting that. But instead, what we actually saw come out was an 8.3% inflation. So we saw inflation come in 0.2% higher than expected, which led to that 13% correction because the market hadn't priced in 8.3, it priced in 8.1. And furthermore, in core CPI, we were expecting let's see here, we were expecting a 6.1%. Okay, we were expecting a 6.1% inflation rate, so we're expecting a 0.2% increase, but instead we actually saw a 0.4% increase, and we saw an inflation rate of 6.3% on the core inflation. So you can see that both numbers came in higher. We had 0.2% higher than expected on regular inflation, and 0.2% higher than expected on core inflation, right? So that led to the drop, right? That led to the market going down. That led to us seeing a correction. That led to us coming all the way back down to where we are now. And now you can see on Bitcoin, on the hourly chart, for example, what we're actually doing is we've come way down and we're actually retesting the top of this prior bearish pennant formation. Okay, so we're retesting the top of that pennant formation. Yes, we've found support here briefly, and we can expect, you know, I would expect us to lurk in this region until the Ethereum merge, which of course is tomorrow. So that's another main part we need to get into in this video. It's like, well, we've seen massive volatility now. We had a major event on CPI. Guess what? Volatility's not over yet, right? We've still got the Ethereum merge, and that is happening in 1 day, 1 hour and 34 minutes by the time it gets out this video, maybe an hour, just over an hour, right? So Ethereum merge is coming in 1 day. We've just had a massive move on CPI. It is the month of September, which is the most red month in Bitcoin's history. And then in just a week from now as well, we have the FOMC decision where they decide whether they raise rates again, which they will, depending on how much is the real question. So look, I know that the market has said that the chances of a 50 basis point hike has actually fallen to like 13%. And that's the last time I checked yesterday. So 50 basis point hike, which would be a decrease because the last hike was 75 basis points. It's gone down massively, right? The chances are we'll be seeing another 75 basis point hike. And it's possible, maybe not likely, but it's possible we see a 100 basis point hike. So this month, you know, could get very bad. And this is why I've been preaching to you guys over and over and over again, and you can't say I haven't been doing this. I do it every video. Wait for confirmation. People were buying yesterday. I saw in my YouTube comment section when I made the video yesterday, people were buying here. They were buying at 22K. And I was trying to tell them not to do that, but, you know, they don't listen. It's like, well, why would you buy at 22K? Realistically, why? Well, if you look at it and you zoom out for a second, right? And you look at what's happening in the market. November 2021, downtrending line through to March 2022. This is the same line, it's just a cleaner chart, right? Why would you buy at 22K? Why wouldn't you wait for an extra 5% gain and buy when that line is broken? You are saving yourself so much downside potential by waiting for confirmation, right? I try to tell people this over and over again. A lot of you listen, which is great. I'm sure you save the money. A lot of you don't listen, which is unfortunate, and I'm sure you've learnt your lesson now. Confirmation is the key to a trader's success. I spill it over and over again. I'm going to stop saying it in a second, but it really, really is. And if you're not waiting for confirmation, you will get wrecked, right? You will. It's just it's a fact of the market, unfortunately. Some of the more intriguing things that's happened in the last 24 hours is this, right? This macro uptrending line, this 11-year macro uptrending line stemming from 2011 through to 2015, through to 2020, through to 2022. We gained it back on the weekly candle close a few days ago here. We closed above it. Now we've actually come back up. We've tested the same region of a 200-week SMA, rejected off of that again, and we've come back down, and we're lurking below it right now. Yes, we haven't closed below it. Yes, it's just a wick. But the point of the matter is, it's not very strong support anymore, right? You know, when you see strong support zones just getting moved through like it's bloody a knife cutting through butter, you know, that's when you realize, hey, this support zone isn't actually very prominent anymore. So this 11-year trend line, I'm still going to leave it up. I'm still going to talk about it, but it seems as though it's being invalidated. You know, I mean, if we flip to the shorter term time frame, I suppose we can get a better look at it. Yeah, so look, you know, it basically did nothing on the way up and the way down. It basically acted like it wasn't there. Now, if we move back to like the 27th of August through to the 4th of September, you can see it's acting as a resistance. But as of right now, in that recent move we've had in the last week or so, it hasn't really acted as support or resistance at all. So I think this line is losing its validity. Look, I think it's still valid. I think it still certainly needs to be drawn up and watched, but I think it's losing its power a little bit. And I think we need to look for other measures to understand where the price is going to be going. And I think one of the main other measures we can look at really, as I said, is the downtrending resistance line on the 3-day chart, but it's also support on the 3-day chart. And the 3-day chart's very important because the 3-day chart also has a horizontal level that we need to be looking at. And that horizontal level is, of course, 33.46. Okay, we can see, and shout out to Mega Crypto, by the way. He found this line, he found the trend revolving around. I'm kind of plagiarizing it from him here. But it's great analysis, so I'm going to do it anyway. So essentially what he found is that 34.46 is a horizontal level on the 3-day RSI that every time we lose it, we drop down massively, okay, on the price. And you can do this yourselves, but generally speaking, it's a 40% drop. And every time we bounce off of it, we see at least a 50% or 40% bounce, okay? So you can see it right now. Just take an observation of what I've got on the screen here. Every time we bounce on that, the price moves up. Every time we lose it, the price moves down drastically, right? And so right now, you know, what we actually just saw just a few days ago was a bounce off of it. And as a result of that bounce, we saw a pump of around 23%, which is consistent with what happens with that line. Now, the problem is this, okay? We have a downtrending resistance line, which we broke to the upside briefly, but it looks like we're faking out. And that downtrending resistance line is going to be meeting up with 34 on the RSI very shortly, meaning we will have to make a decision. We'll have to break that line definitively, or we'll have to break downwards definitively. And if we break downwards definitively, it will most likely lead to a retest of 17.5k, or even prices below that, right? I'm not discounting lower prices. Now, this is something I have to make very clear, okay? I think on Bitcoin, my opinion on Bitcoin is this. It's quite simple, right? I think Bitcoin will bottom out, and I've changed, for those of you who watch my old content, I've changed up from just Q4, I've narrowed it down. My opinion on Bitcoin is this. I think Bitcoin will bottom out between October and November. In one of those 2 months, Bitcoin will bottom out. And I think the bottom will most likely be in, right, at 17.5k. However, there is a relatively strong chance that we go down towards 13.8k, 11.5k, right? 13.8k to 11.5k, I'd say 25% chance. 17.5k triple bottom, I'd say that's a 75% chance, okay? If I had to guess on where I think the bottom would be, I think it would be more likely at 17.5k, or at least in that region. But I'm not discounting the fact that it's definitely possible we can go below. We can go below, okay? I'm saying my main part, and I've always been a date range person, I've always looked at dates more than prices. The main part of my prediction is November, October. I think November, October will be the bottom of Bitcoin. I've made my reasons very clear for that in the past. I'll briefly go over one of the main reasons again. The main reason is this, essentially, right? Assuming, and this is what I've said just then, assuming we see the 17.5k bottom, okay, or 17.6, whatever, right, we will meet, the 17.5k level will meet the downtrending line on the 19th of October, meaning by the 19th of October, we will have to break upwards or break downwards, okay? So if we break upwards, that would be the bottom in October. If we break downwards, where would we go? If we break downwards, as I said, I think we would go between 13.8k, roughly, and 11.5k, roughly. Now, assuming we go all the way down to 11.5k, that downtrending line will meet 11.5k at the latest at the end of November, 27th, 28th of November, right? At that point, again, we have to break the line or we have to go down. I don't see us going down there. I don't think it's possible I think it's possible, but not likely at all to go down below 11.5k. And hence, I would have to assume, as per the downtrending resistance line, which I deem to be the invalidation point, that the latest Bitcoin can possibly bottom is late November. Therefore, I'm thinking between October and November, we will see the bottom on Bitcoin, okay? That's essentially my opinion on it. Now, a few more things I want to look at. S&P 500 saw a massive correction. In fact, we saw 125 red points in one day, which is a 3% drop in one day. Huge drop for the S&P 500 there. And we've come right back down to this dashed uptrending support line, which will be interesting to see if that holds. If it doesn't, of course, we're going to see more blood. And then total Total cryptocurrency market cap has rejected from resistance, and Ethereum has rejected from its major macro downtrending line as well, and it will be testing that 1,417 level. So I think that, you know, lots of big things to be looking out for Bitcoin. More specifically, and we'll talk about this tomorrow before it happens, hopefully. I might actually make a video after it happens, but we'll see. Tomorrow is the Ethereum merge, okay? Very important event. It could go wrong. Some people have compared the Ethereum merge to changing the engine of an aeroplane mid-flight. It could go wrong. It has the potential to go wrong. Do I think it will go wrong? I don't know. I don't know enough about it. But I can say that it will lead to volatility. And then just next week, we have the FOMC decision. The rest of September will be a hectic month for Bitcoin. I know at some point this month as well, I think it's the 25th, Mt. Gox, the exchange, will have released all of the Bitcoin that it's holding back to prior investors that got hacked, essentially. So that will lead to some volatility as well. There are lots of things coming up. There are lots of things coming up in September that you need to be watching out for. I think if I had to break it down for you mainly, the main thing I would be watching, rarely, and I mean this quite honestly, the main thing I would be watching on Bitcoin, the most important thing you need to be watching on Bitcoin, in my opinion, is actually the 3-day chart. It's what I've got on the 3-day chart here. It's the downtrending line on the RSI and the price, and it's the 34.44 level. I think that is the most important chart you should watch for Bitcoin. So I'll catch you tomorrow, guys. If you go to my YouTube channel homepage and click on the join button, you can see the rewards that VIP members gain access to. They get 4 trading setups per week, prioritized reply to comments by myself, trading psychology, a lecture, so a 2-hour lecture on trading psychology, and then exclusive Telegram group access where we can discuss the charts and discuss the active trades from the exclusive trading setup. So if you're interested in that, that's 40 AUD a month, which works out to be, as of September, around 28 USD a month, less than $1 a day. Go ahead and sign up to that. Moving forward further, we have the BitGet Exchange, and this is a very important one. The BitGet Exchange is something that I hold very closely as a trader. Why is that? Well, because I spent about a year looking for a good exchange. I got pretty much scammed on Binance last year during the bull market in 2021, and I found BitGet. They reached out to me, and then I reached out to them for the partnership. They got 0 trading fees on spot pairs, so it's free, entirely free for spot, and then on futures, they've got about 4 times less the fees than Binance, 4 times lower fees than Binance. And Binance is known to be the most popular exchange with the lowest fees. So this exchange is extremely cheap. On top of that, it's non-KYC, which holds true to the values of cryptocurrency, right? It's decentralized in your personal land. You don't need to link your identity to it if you don't want to. And it's globally available on that non-KYC format. So sign up to BitGet using my referral link in the description below. And in doing that, you'll gain access to over 4,000 USD in rewards by completing a few tasks. So again, use my referral link and sign up. It supports the channel and it supports your own trading endeavors. And then further, we've got the Crypto Academy, and this is if you want to learn how to trade, you want to learn how to do TA, you want to learn how to analyze a market, and that's where the Become a Trader 10-unit course comes in handy. Now, this course, and you can go to our website, you can read the abstract here, but this course was developed by myself and Megawa Crypto. We made this course during the start of 2022 and released it in around May 2022. We analyzed basically, you know, dozens of different courses, technical analysis courses that are available on the market. We analyze what was wrong with them, we analyze what was right with them, and we analyze things we can put together. We've created this so that we've got slideshows, we've got videos, we've got worksheets, which is no other course has that, by the way, all of which is kind of aimed to kind of direct towards any kind of learning style, whether it be verbal, whether it be visual, whether it be practical, any kind of learner you are, you can, profit from this course in terms of knowledge and then move it into the market and actually profit financially. So if you're interested in this course, you can go to our website, read out the 10 units, whatever, read everything you want, and then chuck us an email here at cryptoacademycourses@gmail.com, and we'll get back to you with all the relevant information. Thanks for watching the video, guys. Hope you enjoyed, and I'll catch you in the next one. Cheers.